I've done it again. It's afternoon. Good afternoon, everybody. I'm going to switch the time of these until the mornings just so I don't get it wrong every time. So, good afternoon. Thank you for tuning in. Hello to everybody who's watching us on Facebook or LinkedIn or even on our YouTube channel as well. It's Tuesday, the 20th of June. Today, I'm doing a brief kind of update on business structures. We get a lot of startups that come to us. They're not quite sure what the best business structure is to trade as, whether that's a sole trader or limited company. In fact, they don't even know what either of those actually are. So I thought I'd cover that today in today's kind of update. Thanks to everybody who kind of sent messages or kind of commented last week about the awards. Unfortunately, so we didn't win either of the awards, the small business one or the young business person, which wasn't me, obviously. That was Ben, one of our directors. But yeah, congratulations to all the winners. It was a brilliant night. So yeah, Jim Parker and all of the Torbay Weekly team who kind of put the awards night together. It was fantastic. So yeah, brilliant. On to kind of what we're talking about today. So I'll just share my slides now. So when we get a lot of people contact, as I said, they don't know what the best option is, they don't know what a sole trader is or even what a limited company is. So I just did a bit of a quick summary for everyone today and kind of something we can share this video back and so you can watch back and ask questions in the future. So a sole trader is what is also known as self-employed. You have to be registered with HMRC and you normally have to do this within 28 days of starting your self-employment. In reality, there's typically no penalties that will be levied until at least the 5th of October after you've actually registered, started your sole trade. So the key is to make sure that you do register with HMRC. I'll share the link for that one shortly on the next couple of slides. As a sole trader, there's no legal differentiation between you and the business. So as an individual, James Twigger, and as if I was and my coaching business, for example, is then the example of that I am responsible for the business, which means I also have to take responsibility for the legal requirements. The profits that you make as a sole trader, as a self-employed, are yours, but you pay tax on those profits. We always recommend, just for good practice, really, that you do use a separate bank account for any sole trade business, well, for any business really. Legally, as a limited company, you have to have a separate bank account, but we always do recommend it for sole traders as well. So the reason I mention that is there is sometimes an understanding or an expectation that if you haven't drawn as much out of your business account as a sole trader, say you'd only taken out £500 a month, so £6,000 for the year, that you're actually only paying tax on £6,000. That's not the case. Because you are the business makes the profits, and you as the business will pay tax and potentially national insurance on that as well. Another question I'll just flag on there: a sole trader can employ staff. Just as it's a sole trader, it's actually the business is a sole trader. However, you can still actually employ staff as a sole trader as well. As mentioned there, you pay tax and national insurance based on whatever the profits are. And if you've got other income as well, then that all kind of gets added onto your tax return pot of income to declare, and your tax and national insurance gets calculated based on that. You can still do your tax return via paper at the moment. You have to request it, but yeah, you can still do it. You generally have until the end of October to submit that tax return on paper. However, if you do it through HMRC or through an accountant who normally file it electronically, you get until the end of January. So a quick summary: a sole trader, you are the owner of the business. You're entitled to keep all of the profits, but you are also unfortunately liable for any losses. And that goes back to that. There's no differentiation between you individually and you as the business. So if the business does get into debt, potentially your personal assets are at risk there as well. So yeah, for and against. For, it's low cost and it's easy to set up. You have the full control over the business. You are the business. And against, obviously, you have the full liability for debt. Just wanted to kind of run through a quick example just to explain a bit more about the taxes side of things as well. So if we kind of have an example of our startup business there, so we've got Bob the Builder. Every individual gets a personal tax allowance of £12,570. So you can earn various types of income, but as long as your total income for the tax year is less than £12,570, then you will pay no tax. We then got between 12,500 and 50,000, where you pay 20% tax, and above that rate, you get 40%. It's only once your income hits above 150,000 that you start paying the highest level of tax, which is at 45%. Now, as well as tax, you do actually have to pay national insurance as well. So a lot of people, see, if you're employed, you get your pay slip and you see you have tax and national insurance deducted from your income as an employee. The same is for being self-employed as well. However, the catch is there's actually two different types of self-employment national insurance. So you have Class 2 national insurance, which is typically it's £3.45 a week. One of the reasons why you used to have to register for with HMRC for self-employment straight away was so you could start paying this Class 2 national insurance. And it used to be paid either monthly, quarterly, or annually by direct debit, or you used to go to the post office back in the day and pay it. But actually, these days, it's all kind of been sucked up into the tax return. So you would actually only pay those pay national insurance it's recently changed as well. So what the HMRC have done is, or the government have done, is bring the tax thresholds in line with the national insurance thresholds. So it used to be if you had your profits below that 6725, you wouldn't need to pay any Class 2 national insurance. Now, because what they're doing is bringing them in line, you would still get a credit for national insurance if your profits are above 6725, but you don't actually physically pay that national insurance now until your profits are above that 12,500. So as I mentioned, it's £3.45 a week, which is £179.40 for the year. You also have Class 4 national insurance, which is basically treated like an extra tax. So again, due to the changes in that levelling of the tax national insurance thresholds, you will pay no Class 4 national insurance up to 12,500, and above 12,500 to that kind of that upper threshold, which again is in line with the tax. You'll now pay 9%, and it's only when your income goes above that 50,000 that you pay 2% on any amounts above that. So it's kind of that staggered steps. So it's the two types of national insurance and the one type of tax. I've done a couple of examples so you can kind of see how as your profits grow, you do pay more tax and national insurance. So 12,500 profits, you pay no tax and national insurance, but at that point you would still get a tick in the box for your Class 2 national insurance, which means that if you are, so you're getting credits towards your future state pension. And I'll cover that a different day, but it's important. Again, Martin Lewis covered it recently on one of his programs, how important it is to make sure you are making the most of those national insurance credits to get your full state pension when you hit retirement age. So there's a couple of other examples there that you can see on different levels of profit. So you can see very quickly how as you kind of your income increases, and especially when you hit 60,000, your tax and national insurance starts going up considerably as you hit that higher rate threshold. I did mention it earlier on, but I've created a kind of a short link there if anybody does need to register with HMRC. So that's http:// or you probably don't even need to put that anymore. So bit.ly/self-employment-reg. So that's bit.ly/self-employment-reg, and that will take you through to the HMRC portal to register for self-employed. If you haven't already got one, you'll need to create a government gateway, but that will kind of take you through that process. So just having a quick look on the company side of things. So a private limited company has to be is incorporated with Companies House. Generally, the ones that we deal with are limited by shares. That's the most common one that we got because they are trading companies, which means that the company has shareholders, and the liability of the shareholders to the creditors is limited. So unlike a sole trader who has unlimited liability, if the business gets into debt, the individual, the sole trader is liable for that. As a company, you're limited up to the amount that you've originally invested. Your personal assets are protected. Whereas we also have a company limited by guarantee. There are no shares in one of those companies, and an individual can have both positions, and there could be multiple directors or guarantees on that one. So company directors run the company on behalf of the shareholders. We see that in kind of big companies you might see listed on the stock exchange. All of our clients are small businesses, really small companies, and generally we find that the company directors are also the ones who are the shareholders. You normally have to pay we call an application fee, basically a registration fee with Companies House. To do it with Companies House directly is about £13. We typically do recommend using one of the kind of online agencies, which you pay a couple of pounds more, but it makes it a lot quicker. Their interface is a lot easier to use. Personally, Companies Made Simple are one of the ones that I like to use, but there are other options out there. So before you even get to that stage, you'll need a few things. So you need the company name, and you'll need to have a registered office. So the company's name has to be unique, and there's also some things that you can't put in the name. There are certain words that trigger. So for example, king, queen, you often have to get exclusive permission from the royal household to use that. If you're including the word architect or chartered accountant or any kind of professional qualification that might be a protected title, then you have to go to your registered body and get permission for that. So those sort of things are something you need to consider. Registered office, you're more than welcome to use your home address. However, what we typically find is people are a bit nervous about having their home address in the public domain because it's all listed on Companies House. So often, as an accounting firm, we offer that service as a registered office. And also that means that the directors don't have to have their home address listed as well. So it's also the service addresses for the directors as well. A company has to have at least one director, and where you've got a company limited by shares, you need to have one shareholder as well. We need to decide in advance of registering the company how many shares there's going to be and who are going to be the shareholders, and then also creating the rules about how the company's run, and that's the Articles of Association. So a quick summary here. Private company whose owners are legally responsible for its debts only to the amount of the capital that they have put in. So nothing over and above that. There is less personal financial exposure, which is obviously a benefit, and you have that limited liability protection as well as a limited company. However, it costs to set up the company. There's the ongoing fees, such as accountancy, registered office fees if you wanted to use a registered office service. So there's ongoing things. And just to do the annual accounts, annual confirmation statement, that's an additional fee of £13 a year as well. So it's all additional costs of having a limited company. So it's not really worth. There's reasons why you might want to have a company and keep it dormant just to protect the name, but I said it's the cost of keeping that up each year. And I said that, yeah, the annual accounts and the financial reports do go in the public domain as well, whereas your self-employment accounts and tax returns, it's only HMRC that see them. So just a quick one on the tax side of companies. We did have an increase in corporation tax this year, unfortunately, and it kind of jumped from 19% as a flat rate for all companies up to 25%. But for smaller companies, there's still a bit of respite there because the first £50,000 of profits are still remaining at 19%. So again, it's one of those things that if you can manage your profits to below that, you still be paying the same amount of tax as you were previously. But above that, there'll be the marginal rate, which you kind of want to avoid. So yeah, there is the corporation tax increase is definitely having an impact. We've also seen the end of the super deduction as well. So through COVID times, for 2 years, we basically were allowed to claim 130% of asset purchase costs as a tax deduction. So that's now come to an end. So we have to maximise those kind of other available reliefs that we can do to keep profits down or keep the tax bill down. As a sole trader, like I mentioned, you are the business, so you pay tax on the business profits. As a company, as it's a separate legal entity, it pays tax on its own profits. And you as a director shareholder will have to take money out for your income. So that can be through a range of things. So the salary, which is put through a PAYE system, so you get your pay slip from your own company. You can take dividends. So dividends are a distribution of the profits after allowing for any amount of corporation tax. So if you'd made £1,000 profits and you were paying tax at 19%, then £190 would go to the taxman, and there'll be £810 left over there that you, as a director shareholder, could issue as a dividend. Your first £1,000 of dividends are tax-free a year, and it was 2,000. That's been halved in the new tax year, and that's going down to £500 from next year. So again, it's reducing again, which isn't particularly great news. Another way that we're going to be seeing a lot more is where companies are generating profits and they're generating cash, and they're not quite sure what they want to do with it. One of the kind of tax efficient things to be doing, actually probably the most tax efficient thing to be taking money out of the business, is to be paying it to a pension scheme. Obviously, if you're in your 20s, you won't be seeing that for 40 odd years possibly, or 35. At the moment it's 55, going up to 57, then 58. So so depending on your age, it might not be as attractive an option for you, but it's a tax efficient way of taking money out of the business right now. And there was just a quick thing there on the annual requirements of being a company. You have to do your limited company accounts, which get filed at the Companies House. You have to do a corporation tax return, which gets filed with HMRC. And you also have to do a confirmation statement, which is who the directors and shareholders are. And that has to be done through Companies House as well. I think that is everything I have to do on that today. So that was just a very quick kind of summary. Can I get back on here? There we go. Yeah, that was just a quick summary of kind of the different business structures that you can operate from. Obviously, there also are partnerships. There's the community interest companies. And if you're a social enterprise, you might want to be a charity sort of thing as well. So I just want to cover off the main two today that we deal with. If anybody's got any questions, please don't hesitate to drop me a message either through the Facebook messaging, or you can email james@accountingforeverything.com, or give us a call on the office number, which is 01833 500 202. I'll just put that back up on the screen now, because you can see where my email address is. Ta-da! Yeah, it's got my mobile number on there as well. So if anybody's got any questions, yeah, feel free to drop me a message, give me an email, and yeah, I'll be back next week again. I won't be in the office, so obviously with my Entrepreneurs Circle hat on, I'll be venturing up to Birmingham next week for the Implementer event, which is a 2-day event, which is to help encourage business owners to really implement the plans. There's some training, and there'll be opportunities to implement things. So really excited for that as well. So I'll be there. I'll be coming live from Birmingham next week. So have a great week, everybody. Back at 1 p.m. next Tuesday. And for the first time, I might actually say good afternoon rather than good morning. So have a great week, and I will see you next week. Have a good one. Bye.